segment, Hack of the Week, which I know with your financial background, you probably know a lot about this, so you're more than welcome to chime in if you want. But if you had to drop out, I definitely understand. But thank you again,
Thank
Ron,
you.
for really giving us just the inner blueprint. I love it. I love it. So now we're gonna hop into what's called our Hack of the Week. Every webinar, I like to teach, like, once again, share a financial concept, whether mainly financial. Sometimes I throw in a little personal development. But our hack of the week that we're going to discuss is the 5 myths of life insurance. The 5 myths of life insurance. Original concept by DeAndre M. Riley. Shout out to him. Any Groundhog Day fans out there, love this meme. All right, so with life insurance, there's especially in the African American community, there's definitely a stigma based around it, what it is, what it's for. And I'd say at its purest, life insurance is a form of income protection. Income protection. Okay. It's basically something, if something, God forbid, were to happen to a spouse, usually the working spouse or breadwinner, and that income was no longer coming in to that household, for that family, for those kids, then life insurance is something that is awarded to the surviving spouse, and it's something that can keep that household going, keep the kids in school, keep the mortgage bills paid, keeps the car payments. It keeps that family from having to be disbanded from that lifestyle that you spent your whole lifetime creating. Okay. Now, also with life insurance, it's also, a lot of people don't realize it is an immediate estate. An immediate estate. What that means is it's a form of building wealth. I know Ron touched earlier about permanent life insurance. There's more than one type. I'm really not about to kind of go into this whole everything about life insurance. I know everybody just start running for the hills. But at its purest form, just remember that life insurance is pure protection for the income of the household. All right. And when it creates immediate estate, that means you have an immediate, almost a bubble of net worth, if you will, that's set aside for that family. Okay. And that's what's important about it. And I think in a lot of communities, people treat life insurance like this mysterious financial boogeyman, if you will, and they can't really see past what the equity and the wealth building that life insurance provides. All right. And another thing I'll hit on before I get into the 5 myths is that life insurance isn't something set up where it has to be this sort of windfall, where if God forbid something were to happen to John and Mary got paid, it doesn't have to be something where she's given this huge lump sum. Through what's called wealth management, through financial advisors, there's actually ways you can actually, be able to pretty much be able to have it to where you're able to go ahead and, basically, almost missed my point here, have it dispersed. You get it dispersed. So instead of this 100,000, 200,000, 300,000, you can, through income vehicles, what we'll call annuities, investments. I'm not going to hit on a lot of that stuff, but basically an investment at its pure form. It's now something that can come into that household in a form of a monthly payment. So instead of somebody cutting a check for $500, $1 million if somebody dies, guess what? There's vehicles where they could disperse those funds to literally recreate your monthly income that you were already bringing in for your family. So now it's 4,000 coming into the household, 5,000 coming from the household each month, month in, month out, after that person passed, 6 months from now, a year from now, 3 years from now. So it isn't always this sort of windfall that people are like, oh, people are going to make money off me, and get all this huge payday. Well, through wealth management, like once again, like Ron mentioned, getting together with the right financial advisor or investment professional, there's ways you can disperse it to the family where they get that same income each month that you were already providing. So they want to just get a lump sum. All right. So here's the first myth we have, guys, with life insurance. All right. So I commend those of you guys that are still on right now, because most people can't wait to just scatter away from this subject. All right. So the first thing with life insurance, which I'll break down with you, as we see here, is it's too expensive. It's too expensive. And yeah, this is one I get a lot. And it's not really so much when I ask people it's too expensive. A lot of times it's not that they had a policy and then the premium went up and they couldn't pay their bills. Sometimes I come across clients where they never even had a quote before, or of like 2 or 3 different companies, and they saw it was all out of their monthly budget. But a lot of times it's just a general perception that it's too expensive. And I'm like, define expensive. Oh, I think it's probably like, I've had people say maybe around $200-$300 a month, or $400-$500. I could pay a car note for that, or mortgage. And I'm like, so you really think that this life insurance is around $300-$400 for yourself or your family? I'm like, did you ever get a quote? Like, no, my dad always told me that. All right, well, when it makes sense to actually get a quote and see if it's actually within what you would think is expensive or affordable. Oh, okay. So that's the biggest thing, is there's this perception wrapped around that life insurance costs as much as your car, your mortgage, and I just can't put in the money for that. Now, don't get me wrong, there's good insurance out there and there's bad life insurance. And sometimes there are companies that do prey on certain communities and take advantage of that. And there may have been whispered down the lane, oh, this company did this and I paid that much. But in general, life insurance can be very affordable. You can get different quotes, and it's a matter of, the younger you are, and typically the healthier you are, the cheaper it is. And I always pose this question: are you ever going to be as younger and as healthier than you are right now? So let that breathe for a second. Think about it. Are you ever going to be as younger or healthier than you are right now? The answer is no, because typically as we go through life, we get older, and then as we go through life, unfortunately, we're more susceptible to health issues. All right, so when it's really too expensive, those are people that probably haven't gotten any quotes or didn't get enough quotes. It could be very affordable. It's a matter of, the main 2 factors is your age and also your health. But when people don't even get quotes or don't even look into it enough, it's just this general perception. That's the thing. There's policies you can get for as little as $30-$40 a month. Somewhere, if you put the family together and do different factors, it could be maybe 100, 150. But it really does range, but it isn't this high number where people think it's always high, it's expensive, so much as a car. All right. So that's the first myth that we bust: is too expensive. All right, here's a second myth. It's a waste of money. Life insurance is a waste of money. And I sit down with clients and like, oh yeah, it's just a waste of money. Okay, how come you never had it before? Well, yeah, because I ain't gonna pay no $30, $40, $56 a month for insurance. And so what if nothing happens to me? I'm just burning money up. I'm just burying money. And I think honestly, and then a lot of times another one is, oh, well, I could put that into an investment. I could take that $50, $75 a month and put that into an investment. All right, well, let's be real. Are you really going to, before maybe you met a financial advisor, were you really committed to putting in $50, $100 away in the bank every month or every paycheck? Or was it, I get the paycheck, I spend it, whatever's left over, throw it in the savings account? Let's be real. Most people, even myself, back before I knew all this, I wasn't putting $50, $100 away every paycheck or every month. So when people say it's a waste of money, it's like, well, it's a waste of money when it comes to your values or priorities. $50, $100 may be a waste of money in the area of life insurance. But let me ask you a question. That $50, $100, did that go toward the nice Jordans you paid for? Or the 4 or 5 streaming accounts that you have? Or those 2 or 3 trips to Rite Aid? Or that night out with the girls or the boys? It's a waste of money when it comes to this area, but it's definitely not a waste of money in your other priorities. So let's just kind of put things in perspective as far as it being a waste of money. and what is really our definition of what we really value. Because if you think about it, I'll pose you this question too. If I were to say, hey, if you go right outside, I got a Ferrari for you. A Ferrari, yeah, I got this off market. I knew a guy from the black market. And black market's probably a bad example. You get what I'm saying. Let's not make that political. But, you know, I got it from the dark web, and I have this new Ferrari waiting for you outside. All right. And yeah, guess what? This Ferrari is $400. $400. Yeah, for this Ferrari right now. Take it. Yeah, $400 for this Ferrari. Oh, okay. So would you ask you a question? If I had a Ferrari outside for you for $400, would you take it? Even comment in the chat if you want. Yeah, I'll be the first one to say yes. I will. I'll take two, please. I will take that Ferrari for $400, but you wouldn't spend any of that for a yearly amount of life insurance for your family. It's all about priority. So you see the value in a Ferrari for $400, $200, but something about life insurance, once again, it's the financial boogeyman mindset. The boogeyman is where it's not, you can't correlate it with income protection that protects your family, that replaces your income if you were to pass and brings in. Of course, life insurance is for paying off any existing debt. There's advisors you can meet with to factor that in. Yes, it can also go toward burial expenses. That's one component, but it's to replace the income that your family needs. So it's really a matter of not really sorting your priorities. If you spend $100 a month on a phone of insurance, Jordans, streamers, going out, but $100, $200 is too much for insurance, but I'll pay that to buy a Ferrari. It's all about correlation, guys. Myth number 3, work insurance is enough. Work insurance is enough. Oh, I got to do a job, Hayward. I got to do a job. I'm all good. I'm all set. Okay, I hear that a lot. But think about it. With work insurance, it's usually what's called group, known as group insurance. One of the main components of group insurance is that in the contract and in the clause, it grants pretty much full control, universal control to the employer. So your group insurance, your work insurance, what you got through the job, isn't your life insurance, it's your employer's life insurance. Now, think of the trends and the studies and kind of where corporate America has been going. Have you been reading articles reading, oh, X company jumps for joy, benefits are getting more plentiful, premiums are going down, and they're getting more and more benefits and less that we have to pay out of the payroll. No, it's usually the opposite. It's been trending for the past 5-10 years, is that employers are putting more of the responsibility of getting taking care of your investments or your savings on you. So they're matching less. Companies aren't matching anymore. Pensions are out the window. My generation of millennials, we aren't going to have any Social Security. So more and more, you're seeing this trend of corporate America putting the burden of paying for health insurance and the benefits, putting that on the employees. So does it make sense to bet against a working trend? All right. Second thing is that, I had a client, and he was someone that will go around, he's involved in a lot of different things. He's a, like an author, speaker, recently opened up a congregation, good friend of mine. And, he had a really good, comfy job in corporate and automotive as well. That's where he started at. And, one day, they sat him down and said, hey, Joe, we really appreciate all the work you've been doing for the company. And, we appreciate you. You've been such a great asset over these past 3 years. We have extraordinary growth under your leadership of the department. Unfortunately, Joe, we're really concerned about where your alliances lie. He's like, what? Yeah, it seems like the past couple years, and he's been paying into this group insurance for years, the health benefits and the life insurance all through the job. All right, all through the job. And basically they were like, we're a little concerned, Joe, about where your alliances really lie. You've done such a great job for us, but now we see you, going out and doing book signings and you're speaking and you're on the road and now you just opened up the church and we just don't feel like you're really aligned with us anymore. We're not really getting out of you what we used to get, so we're gonna have to let you go. And this guy was married, 3 kids. All right. So he was okay. I mean, he'd done well enough to where, he worked with me and whatnot. So he's good. But, at that point, he didn't really need them. But at the same time, all that money he paid into these work benefits and life insurance was all gone. Of course, you could do what's called Cobra. Then, he had benefits for the first 60 to 90 days. But let's be real. Cobra, come on now. Cobra's going to be for him and his kids, probably like $1,100 a month. Nobody's going to pay for that. All right. So at the end of the day, he had to end up getting rid of those benefits. Now, even though he was okay, but think about how many people that had those work benefits or life insurance through the job. Also, with everything going on with COVID-19, what loopholes are in your group benefits? Have you read through the whole PDFs? No, you set it up. The benefits counselor gives you a little 3-bullet slide of what your benefits are. Oh, okay, that sounds good. I'll sign up. And that brochure, you take it home. You're not reading that. They give you the online account to go in and look at all the PDFs. You're not reading that. Let's be real. So there's a lot of clauses in there, including just concerns about, obviously with the COVID-19 pandemic, you don't want to leave your family's future up to chance with your employer. That's why we agree with always teach our clients to have your own privately owned benefits, as in your privately owned work insurance. Once again, if they offer it, it's usually cheap, it's great, still have it. Don't go out and cancel your group insurance right now. Hold on to that. It's good to have it as a secondary source, but you never want to be fully dependent on what the work offers, because at any time they could change things around. Times are tight, pandemic. We're only going to be able to cover half of your premiums for your insurance. Now they control all that. And then if they let you go furloughed, there's still a lot of stuff going on right now with if you get sick while you're at work or if you're outside of work, can you really get paid for that? And it's just not, I could go over this whole slide for another hour, but I won't. But at the end of the day, you never want to be dependent on work insurance. All right. And yeah, exactly, Nick. And I see you guys in the comments, really appreciate Eric, Jay, your comments. But yeah, at the end of the day, you just don't want to be dependent and leave your future to someone else as far as the benefits go. All right. Myth number 4. Myth number 4, only needed for burial. All right. Only needed for burial. So I had to kind of throw in that meme in there. That's kind of a very dark, but very real comparison to where we're at. So planet Earth is like kicking us in the face right now. We thought we were top gun over here, but the tables have turned. All right, so next myth is you only need it for burial. Only need it for burial. Yeah, and especially in the African American communities, this is what all we thought it was. There's even a little nickname going around called burial insurance. All right. So think about it. All this talk about, building a legacy and, getting our due and all this. What is really the value behind leaving your family enough to put you in the ground and then they're at zero and the mortgage is due next month? How is that leaving a legacy? How is that moving our people forward, so to speak? All right. Whether you're black or white. I mean, isn't the generation saying always the older folks to leave, do better for our generation, do better for our kids and how we had it, not leaving them at zero. So this is kind of in the beginning, what was kind of taught in our community. Let's get enough to put people in the ground. Let's get enough GoFundMe money to take care of things. I've had a lot of people I know that have died without life insurance, or families that had people that die without life insurance, and they're sending me a GoFundMe link. I think we need to change the paradigm. But once again, life insurance is income protection. All right. It's where you rent wealth in case you die too soon, until you own your own wealth in case you live too long. You rent your own wealth in case you die too soon, until you can afford your own wealth and build your own wealth in case you live too long. Okay? So we need to really break out of this sort of mindset that it's just enough. And don't even get me started on those who don't want to leave their family anything at all. All right, I'm not even gonna go there. But it's for three main purposes: income protection, to replace that income. It doesn't have to be where your family's getting this $100,000 million windfall. There's, through financial planning, wealth management, we can make it to where they're bringing that annuity or investment is bringing them $4,000, $5,000 a month, $6,000 a month, replacing that income you had. That's all they're getting is your replacement. Second is to pay off existing debt, that mortgage, those two cars, the kids' college funds, or if they want to become a business owner, either way. And then third is for burial. That's the last sort of concern. That runs anywhere from maybe 8,000-10,000 at the most. If you have to go to the fanciest cemetery, I know back in Detroit, Elmwood Cemetery, that's where, Elmwood, they're going to bury me in Elmwood. Yeah, you all, Elmwood ready. Elmwood certified, that's a fancy cemetery back in Detroit. But, that's the last thing to really worry about. You can bury people as much as 10,000, as little as 2,000 cremation. All right. So we had this sort of thing where that's all it's for. All right. But that's not what it's about. Okay. So that's the fourth myth. So don't get it twisted. It's three reasons. It's for income protection, to protect and replace your income. Second, to pay off any debt you leave behind. Third, final, least priority is burial. Okay. Number five myth, guys. Number five myth, I got no time. I ain't got no time for that. Nobody got time for that. That's for old folks. All right. This is where I'm going to get real again. For those of you guys still on. There's some of you guys, of course, as soon as you heard life insurance, you ran for the hills. Scaried away. I call them scaredy cats. As soon as you hear life insurance, you either tune out or, it doesn't apply to me. So those of you guys still on, I commend you. You get what I'm saying here. Fifth myth is I got time is for old people. All right. I'll tell you, I'm not trying to be a fear monger. I'm not trying to, offend anybody, but I care enough about you as having people that I personally lost for not having life insurance, for family members, for clients, for family, friends, and clients and people that I know. You don't know when it's going to happen. You don't know when it's going to, that's not going to happen to me. How do you know? How do you know? So does it make sense to go through life with this misplaced sense of immortality? Or be a realist and say, all right, let me just knock it out, get it over with, and keep living my life instead of let this thing squirt? Well, it ain't going to happen to me. If anything, if this pandemic hasn't taught us anything, is that life, we're here for a flicker. There's people I knew that I just saw when I was back home. Here, saw them, hey, how you doing? How's everything? They're gone. COVID. Not just COVID, but a few of them COVID. And people I've known, young, died, suicide, or, it's just, yeah. So I say that to, this isn't one thing you want to procrastinate on. And for old people, So once again, take a hard look at this. Whether you decide to connect with a financial advisor or planner or anyone after this, you got to just take a hard look at, this is the foundation. A lot of people can build wealth through life insurance. I like to preach, it is the pure form of protection. I'm a fan of term insurance for a couple of reasons. I'm not going to get into the whole cash value versus term today. But at the end of the day, it can be a wealth building vehicle. There's ways, more business-minded people can use it for that, yes. But at the same time, it's a pure form of protection, but it creates an immediate estate of wealth that's set aside for your family. doesn't it make more sense? Doesn't it feel more of a peace of mind to just get that set up and it's just out of your hair? You don't have to worry about it versus you let it linger. The older you get, the more expensive it gets. The older you get, the more chance you might have health issues. So the more expensive it gets again. Does it make sense to kind of knock that out and have it over with? Because I pose it once again the question, are you ever going to be more younger and more healthier than you are right now? Unless one of y'all got a time machine I don't know about, the answer is no. All right. And then also too, like I said, I don't care if you go through me or Joe, Jim, Adam, Nancy, I don't care. All right. And yes, a life insurance rep does get paid a commission for providing you protecting that family with policy. All right. I'll tell you right now, any commission I make ain't gonna last nearly as long as setting up your family's legacy. All right. Commission I have, I invested and it's gone tomorrow. I invest or I spend it and it's gone tomorrow. Or any other person you go see. So that whole sort of thing, I don't want nobody making money off of me. Well, you won't have any problem cutting that check to the car dealer or the guy cutting your grass or cutting into Netflix or anybody else or anyone else, the cable guy. But for some reason with life insurance, oh, who you are, whoever it is, you got just some resistance of what are you going to make off of me? I'm trying to protect your life, bro. I've had people as young as you, as old as you, have come and gone. I have my own policies. I could be gone tomorrow. All right. So just something to think about. I don't chase folks. I just remind people what I do. And this is really a personal subject for me, especially with people that I've lost because they didn't know this information I'm sharing with you. So just something to think about.